All right, everyone, happy Friday. Going into a 3-day weekend. Once again, reminder that there is no trading allowed, or there's no trading for President's Day on Monday, February the 20th. All right, so here's some economic events going into next week that you need to be aware of. Number one, once again, you have Monday holiday, Tuesday existing home sales 10 a.m. Please mark your calendars. These are critically important. There's actually a lot of data just like we had over the past week. And we'll discuss the action on the SPYs and the Qs. But you have existing home sales at 10 a.m. on Tuesday. Wednesday, the FOMC meeting minutes from January and February meeting will be due out at 2 p.m. I do expect them not to say anything new that Powell hasn't said already. So we'll see what happens there. There's certainly some volatility, especially when those minutes are released. But generally, if there's no new news, so to speak, then the markets generally just kind of stay relatively flat or even potentially move up, depending if there's a sell-off. And then, of course, we have Fed member Williams. Also, Thursday is going to be big too. You have Q4 GDP, initial jobless claims at 8:30 a.m. And Friday is a big day. You got PCE, core PCE, personal income, personal spending, and Michigan sentiments, inflation expectations, consumer sentiment at 10 a.m., and new home sales. This is all 1 week, folks. So get ready for another volatile week. So let's go and jump into the charts here. As you can see, we started the week around 408, and we're literally right back to 408, pretty much at the end of today. So the S&P 500 lost about 11 points this week. Okay, so it is a red week for the markets, but very, very slightly. As you can see, the bulls are continuing to push up the markets, even though we had some crazy action and volatility this week with the PPI release. You saw the markets dip on PPI release. You also saw markets dip when Bullard spoke on Thursday regarding 50 basis points was his recommendation to the FOMC, even though he's a non-voting member, but it definitely put a sour mood in the markets. And this was on a Thursday. On Thursday, you had a shooting star setup. So it definitely looks very, very bearish, right? And of course, today we actually gapped down and we opened at 406. We dipped all the way down to 404 and chopped around the 404 area. And guess what? By the end of the day, we actually finished at 407 once again. And this setup here looks a lot like what happened on February 10th when we gapped down, okay, but still managed to move up. Okay, so you can see that at least from a daily perspective, we're still kind of in this box. Okay, we're still trading within a range. All right, and it's natural, right? The market's trying to figure out which direction to go. But what's encouraging, at least if you're a bull today, specifically on a Friday, is that you have higher volume on the upside this afternoon. Okay, so there's more volume coming up, so this sustains the price or justifies the price action. Now, what's going to be interesting going into Monday is you got to see if we can actually close above the simple moving average 20. This is the white line here. We did gap down right under it, and we're trying to come up and try to, but it's going to serve as a resistance, right? So Monday, you got to see 408 hold or go above to see 410 or so and continue this potential breakout. But a lot of news happening next week as well. So my personal target going into going into Tuesday is going to be, number one, we got to break over this SMA 20. If it starts rejecting here, okay, and it's entirely possible it will, all right, then eventually we'll move back down into 405, perhaps waiting for data, etc. All right, so technical level 408 is the number to watch for the SPY going into Monday. All right, I'm sorry, Tuesday. Once again, QQQ, you actually ended the day gap down. There's got quite a gap to fill to 303. We did close at 301. Over 300 shows me significant strength and pretty good volume on the day as well. So there's a gap that has to fill at 303. So I think this is going to go fill that gap on Tuesday, and we'll have to go from there. But you can see that the Q is still trading within the range, okay? And it's very, very similar to what happened back here. So as a trader, we don't know what's going to move the markets. We certainly don't know what's going to happen in the next moment, but all we can do is just read the charts and forecast and do the best that we can. All right. But the up and down within the range can be mentally taxing. All right. It is exhausting. All right. I had to take a nap this afternoon just to kind of just reset from all the charts over the course of the week. But my point is this: Got to stay vigilant. Got to stay patient with your setup. Look for your best setup. You're right. And be patient with your trades in the next several weeks because the market is trying to figure out what it wants to do. Of course, there's a lot of talk about, potentially more downside to come. And certainly we will entertain that because we are traders. We are not investors, nor are we macro, economists. All right. Let's just stop pretending to be macroeconomists, all over Twitter. Let's just admit we don't know what the heck is going to happen the next day. So let's just play it day by day. So once again, 303 is the upside target for the Qs going into next week. Now, with that being said, let me go to if you are part of TRT, we've been dealing with this 1 hour chart on the SPYs for quite some time. And this is the most interesting thing about stochastics and reading technical indicators is that you can usually use them to catch a good move. That's not 100%, but in general, they give you favorable odds of winning a trade. So we've been tracking over the last several weeks this 1 hour stochastic. Okay. Every time the stochastic over the last 2 weeks or 3 weeks, every time it touches near the floor, which means it's oversold, it usually bounces. So if I go back to February 10th, which this is a 1 hour chart, by the way, our 1 hour chart here on February 10th, we dipped to 404 in the pre-market, and then we ramped up and topped out at 416 over 2 days, ladies and gentlemen. And the stochastic read it perfectly. All right. Here today, same thing happened. In the pre-market, we were all starting to be oversold in the pre-market today. And guess what, folks? We hit 404, exactly the support here, double bottom bounce, and we hit nearly 408, almost 408 to close out the week. So what am I looking for? In this following week, we got to see if this pattern will play out. Look at these little candles moving up, and up. If I'm correct in my assumption, I do think we're going to move past 408. We're going to run into a lot of resistance, though. Number one, this lower high resistance is going to hit probably around 410, 411, 410. All right. If we can actually blow past 408, 411 or about 410 is going to be initial targets. Okay. At least on a short term time frame. You can see the stochastics is a little bit overbought now. Okay. So expect some pullback on Tuesday. All right. Maybe we're going to see a little bounce at 406 range. All right. And then continue to move up. And then we're going to have to see all the data that comes out throughout the week. And no one can predict what the data is going to be. Your PCE data, your existing home sales, who knows what the feds will say next week. But initially, at least going into Tuesday, I do expect that we test that 408, all right, and go from there. Over on Qs on a 1 hour chart, okay? All right, you look at this range, okay? This is a lot cleaner than the SPY chart, all right? The tech sector, relatively speaking, is still holding pretty well. You got to support at 297 where we bounced from today. Once again, just like we did on February 10th, okay, with oversold stochastics. And we did the same thing today, all right? Expect that move into 303 and potentially hit this lower resistance here, trend line resistance, probably around 305, okay? So that would be a kind of a short-term target for Tuesday, all right? If that fails, then we can come back to 297, all right? But you look at this range that we've been trading in, it gets mentally taxing. It gets exhausting to try to predict the moves, right? Try to cash some trades, okay? So I think maybe in the next week or two, we're going to break out of this range. I'm not saying we're going to 320. I'm not saying we're just going to stay in. I think a big move is coming, all right? The VIX certainly says a potential big move is coming. We're going to need some, if you're a bull, you need some really good data next week, all right? Or today's bounce, which was just a dead cat bounce, and you're not going to see this type of move like if you did from February 10th to February 16th. This was over several days where we topped out. This was a terrific swing trade if you were in. All right. So once again, I think a big move is coming. We're eventually going to break out of this range. You just got to be patient. Trade what you see on the chart on a daily basis, and I think you'll do just fine. Please do not try to predict. All right. Try to forecast instead. Forecast what you think what you believe You see on the charts using technical indicators, remove the emotions, remove what you think about the macro economics, remove all your feelings about what the market should do. Because in this market, the way you make money is by following what the market is doing. Have a great night, and I'll see you guys